Yeah, welcome to Mr. Israel channel. Today we're going to handle earn and unearned income. We're going to explain it, differentiate it in a way that you will understand it. I noticed that it brings a lot of confusion. So that's why I decided to bring it up so that we'll handle it together here. Trust me, it's very simple to identify. And here is just a clear explanation on what earn and unearned income is all about. So let's dive in. Now, earned income. Earned income is money or compensation that an individual receives in exchange for providing service, performing work, or actively participating in an economic activity. It, it includes income that is direct result of personal effort and labor. Now, listen. Earned income literally are those income in which you earn by applying effort, your physical effort. You understand? Those income you earn by your physical effort, like working in an organization, you apply your physical effort, then at the end of the month, they paid you. Work your business, you sat there and you monitor it from morning till night. You apply that effort there. That is earned income. You understand? There must be an effort put into it that will make it an earned income. You have to earn it by sacrificing something. Oh, how do I put this in? You have to earn it by actively participating in that thing. By actively, in fact, your presence has to be there for you to earn the income. That is what earned income is all about. Your presence has to be there for you to earn that income. Sorry for that. Hope you are with me. Now, let's take a look at some example. Example of earned income, yes, salary. The regular payment received by an employee in exchange for their work for an employer. Salary, you have to be in the office. Work money till night. Then at the end of the month, you are paid. Earn income because you put in your effort, your physical effort in achieving your salary. So your salary is an earned income. Now, let's check the next one. The next one is consultation fee. Consultation fee, like those that offer professional services. When somebody comes to you and say, please, I want to engage you so that you audit my account. I want to engage you so that you represent me in the law court. I want to engage you so that you give me advice on what to do concerning this business or consultation. Consult you now offering consultation service. You are there physically to make sure that these things are put in place, to make sure you give this advice to this person, to make sure that the account is being audited well. You are putting your physical effort to achieve that. Your presence is there. Earn income, consultation fee. Now, let's check the business profits. Like I said earlier, you have a business, you go to your business, you sit down there, you monitor it. As the owner of the business, you go out to source for customer, to source for connection, to source for other things. Then you come back and watch your business moving, your employees are there. That profit you make from that business is earned income, because what? You are putting your effort into it. You might not be present in the office, but You are somewhere sourcing for the betterment of that business, making sure that the business grows by making necessary connection with like minds that might invest in your business. You are putting that effort. That effort will finally yield what? Profit for you. That is what? Earn income. Because you are putting effort to it. Wages, like this, those people that are engaged in labor services, like when they are building house, you see, laborers, they are paid wages. Immediately they are done with their work, you pay them. You don't need to owe them till the next day. That is wages. Now, payment means to hourly or part-time workers for the hours they have worked. They work for 1 hour, you pay them for 1 hour. They work for 1 day, you pay them for 1 day. They work for half hour, you pay them for half hour. They have put in their physical effort in achieving these wages. So they earn it by participating fully in it. Are you with me? So let's go to the next one. Bonuses. Additional payment made by the employer to employee as incentive or reward for achieving specific goal or performance targets. Now, these are bonuses because you have achieved additional goal due to your participation in the business. You've achieved additional customer. You have brought in more customers, more sales outside your normal what? Target. Now you receive bonus. It is what? Earn income. Maybe they might say, in a day you're expected to make 50 sales. That is your target. And at the end of the day, you made 60 sales. That is brilliant. Now you will not they will not pay you what? A bonus of maybe 10, a percentage of the excess of a percentage of the excess you made. Earn income because you participated actively. So that is all about earn income. Is the money you engage, that your physical effort, as in you strive to get it. I hope that is okay. Now let's check on earn income. On earn income refer to money received by an individual without active participation or direct labor in exchange. It typically includes income generated from investment, passive income, or windfall. On earned income, you don't need active participation in unearned income. You don't need to be there to earn this money. And mostly investment that you make. You invest in stock, you invest in building, you invest in this. The money you generate from your investment, they attempt to be unearned income. Do you know why? Because you did not put any effort in receiving this money. You made your money, you made 50 naira, and you invest this 50 naira in building a house, and every year you are collecting your rent. Investment. So let's take a look at the example. Before the windfall, like money that you did not work for, you just as in like rishi, like the let's say rishi. Oh, hope you understand what we're saying. So let's take a look at some example here on earned income. Dividends. Earning distributed to shareholders by companies based on their ownership of company stock. Based on what? Their ownership of company stock. They have invested in this company with their money. So the money distributed to all the hosts, all the people that have invested in this company is dividend. And this dividend is unearned income because you invested in the company. And at the end of the year, they made a profit. They now distribute some of the profits to those who have invested in it. That is unearned income. Let's check out interest income. Money earned from savings account, fixed deposit or bond. For example, you have 5 million naira. You don't know what to do with that money. And instead of you just keeping that money at home, or instead of you, so the thing is blowing, or instead of you keeping the money in your normal, in account that will not yield you anything, it's better you put it on a fixed deposit, in which in 1 or 2 to 3 months, you have what? Interest on it. That's investment. You invest in it. So that interest from that money you put as fixed deposit is what? Unearned income. When doing the calculation, I will explain more on this dividend, but let's just get the detailed explanation of the difference between earned and unearned income. Capital gain tax. Capital gain. Profit realized from selling assets like real estate or stock at a higher price than the original purchase price. Let's say, for example, this calculator, let's say, is a building, and I bought this for 15 naira, and I decide to sell this thing out for 17 naira. The 20 naira is your what? Capital gain. So, and this is referred to as unearned income, because you bought this for you to resell it. Not actually for you to resell, but it happens that you are reselling it. You made a profit on it without any stress. Maybe because it has added value. Without any stress. That is what? Unearned income. Now, rental income. Like I said earlier, you build a house and put it out for rent. Every year you are collecting your money. Every year you are collecting. You sit in your house, balance, cross your leg. Every month you hear alert from your phone. Mr. A has paid, Mr. B has paid, Mr. C has paid. Next month, Mr. A has paid, Mr. B has paid. This investment that you have made is you are reaping it now. So it is unearned income. It's an investment. And so on and so forth. Periodic payments made to retirees from their pension plans, often funded by both the individual and the employer. So all these things are unearned income. Any income that you did not struggle actively, did not participate actively, are what? Unearned income. Unearned income are based on investment, returns, investment. While earned income are those ones that require your physical presence, physical effort to earn a particular amount of money. It's called earned income. And unearned income is investment. Earned income, physical effort to get that money. Unearned income is money you invested and you are reaping from it. So that is the common difference between the two. So I believe with this video, it will no longer the difference will no longer be confusing you. So you just get the difference and apply it in whatever computation you are doing. So in the next video, we're going to focus on computation, on how to use this on earn and unearned income. So thank you very much for coming by, and see you in our next video. God bless you.